Well, let's move on to Havells. Reported a largely in set of numbers for the past quarter. We have with us Mr. Anil Gupta, the chairman and managing director of the company. Hi, Mr. Gupta. Good morning and good to see you in. Well, we're going to be discussing a few talking points, but let's state that out for our viewers. The strong demand in the cables and wires business, will it continue? The outlook on Lloyd's growth trajectory, and what's the impact of a new entrant, a smaller one, but Bajaj foray into the wires business? Well, Mr. Gupta, let's address one problem, though. That's with regard to the raw material cost. Everyone's been talking about the melt up that we're seeing in metals. That's going to impact a business like yours, maybe temporarily. But how do you see that panning out? Do you think there'll be further pain on margins in the coming quarter? And more importantly, you will say that you'll take price hikes, but in turn, will that hurt demand?
I think absolutely, Nigel, you've hit the nail on the head. There are all these things will be there. The raw material price increases are unprecedented. Copper has increased 50% over the last 1 year, about 25% in the last 1 month. And I think such unprecedented cost increases, everybody is right now grappling with how to pass on this cost increase to the market. Cables and wires business, definitely it has to be passed on immediately because 70 to 80% of the material, raw material is copper and aluminum, and it is being transferred, being passed on. But yeah, in a very short period of time, it can impact margins, but over a period of time, the margins become normal. You rightly asked this question, can it hurt demand? Well, in the very short term, it will, because there has been extra stocking in the third quarter by the channel, which will normalize in the month of January. And hopefully, if it remains stable, then the normal demand should come back. But in this hyperinflationary situation, it can affect demand in the short term. As far as the other products are concerned, like switch gears and fans and all, obviously all these cost increases, including silver, affects the margins. But in the medium term, these cost increases will have to be passed on to the market to retain margins. Generally speaking, in brand and distribution-oriented businesses, the demand is not so price elastic, and hence it is prudent to actually pass on the consumer the benefit or the problem of the cost increases. But usually, in the long period of time, it can affect demand. So right. I hope the world demand for these metals, does not continue to go up and affect the costs.
Well, that would be problematic for those who invested in the companies which are exposed to copper and aluminum. But be that as it may, that is margins, that is the market. Mr. Gupta, I had to ask you about a couple of things. Once you said that it's a hyperinflationary environment, obviously it is not only just hyperinflationary, it's hyper-competitive as well, with a lot of players looking to eye that market. As and when they enter the space, the incumbents also wanting to protect their turf. At the same time, there is this US-India sort of international trade-related tension. Then you have another problem of full capacity utilization. So there is still some time for you to actually go ahead and, start the new plant. If you could give us some sense on all those parameters. One is on by when does the new C&W plant start operating? And as a result of which, how do you ramp production out there on competition and at the same time some new entrants out here?
Well, the sound of it looks like a perfect storm, but no, thankfully things are generally decent for us, good, because the capacity expansion in cables where we were short of capacity has been on. We have started getting the benefits of the capacity expansion done until now, and that capacity expansion is continuing in the coming year as well. A lot of our capex, even for the next year, will be on cables and wires. So we don't see capacity as a major constraint going forward. You mentioned about the tariff situation. Yes, we were looking at the US markets for developing our cables and wires business, which has been slowed down. But our business was not so much dependent on US till now, which you can say is positive. But I think going forward, we'll continue our efforts towards building, our demand in the US market. Hopefully, the tariff situation will normalize over a longer period of time. The final thing about, increased competition from new players, I think I always maintain that, cables and wires business has a lot of unorganized play as well as regional play. I think more and more organized players will come into the market. This will shift the demand from unorganized and regional play towards more organized players, which is a good thing. Yes, again, in the short term, they may try to gain market share through price, which can be a bit of a problem for the incumbent players. But I think over a longer period of time, this industry is dependent a lot on brand building, distribution, and product innovation.
Okay, all right, Ms. Gupta, before we let you go, I wanted to ask you about this opportunity you're seeing in the solar space. So as of now, as a percentage of your mix, how much is it? Where do you see it headed? And what are the opportunities you're looking at for your company?
I think right now it's a very small part of our mix. It is now becoming sizable because the growth is very fast in the solar business. Our investment in Goldie Solar start of this year gives us a very strong hold on the supply chain for the products. Our business focus will remain more on distribution-oriented business as well as commercial and industrial installations business. We are not into the utility play, but there also we see a very strong demand in the coming times. So in the next few years, 3 to 5 years, we see that it's becoming a larger part of our overall business, and it will become almost like a new business unit rather than just remaining in the others category.
So you would expect it to be at least 5 to 10% of your sales over the next 3 to 5 years?
Yes, could be.
All right. Just a final question before we let you go on Lloyd's now this is, because you've in the conference call mentioned that you are looking at anywhere between 5 to 10% price hikes coming in to absorb the cost increases, rupee depreciation pressure, the BEE pressure as well. Will those 5 to 10% be enough? By when are you looking to initiate those price hikes? And what does that do to your profitability target or break-even target for Lloyd's?
I think the price increases have already started because the BEE norms have changed start of this month. The raw material prices have jumped up sharply. So the price increases have already started. But the real thing will be known when the season actually hits. Right now, it's more of channel taking the product and finally eventually. So this demand for summer season starts around February in South and North in March. So we'll really know the impact of the price increases, and the real price increases to the consumer will actually happen in a couple of months from now.
All right, take that point. Always a pleasure speaking with you. Wish you good luck. You said it's a perfect storm, but not necessarily as bad over the medium to long term. Near term may look volatile.